Thomson Reuters Risk and Fraud Solutions empower financial institutions to safely onboard and continuously evaluate customers, members, and vendors, and to increase new business securely through automated technology. Visit tr.com/clear to learn more. Designated is proudly supported by Hummingbird. Hummingbird is a modern compliance platform designed to make financial crime investigations smarter, faster, and more effective. Because today's financial criminals are sophisticated, savvy, and agile, meaning the tools used to fight them should be too. Learn more at hummingbird.co. I'm Yaya Jata Fanusie. When most of us walk into a bank or even call a bank, we deal with a public-facing staff, the teller, a customer service specialist, or maybe even a loan officer. But what most people don't realize is there is a whole group of personnel at the bank who work behind the scenes, yet they are on the front line against financial crime. They are the anti-money laundering compliance staff. You don't interact with them directly, but they're the ones looking for signs of suspicious financial activity. Sara Beth Felix is an anti-money laundering expert and consultant who helps banks get their compliance act together. She spoke to me about how good AML experts are wired differently than other banking staff. It's time to get designated with Sara Beth Felix. Sara Beth, can you tell us your origin story?
All right. Well, I'm a beach girl at heart. I was born and raised in Tampa. I was fourth generation in Tampa, which is quite unusual, and was raised on a little beach just west of Tampa that my great-grandmother also lived on. And I've lived all over. I was married to military for a few years, and so I got to move to the South Pacific and lived on the island of Guam for a few years, but I had to commute back and forth to Chicago.
So how does a Florida beach girl end up working in finance and dealing with illicit finance and AML?
Yeah, so out of college, my field wasn't really a field that a lot of people knew about. In fact, I don't think any college courses in the 90s and the late 90s had anything to do with financial crime. And, I just thought, well, I wanted to be a businesswoman. That's what I grew up with. My dad was a technology executive for most of my life. And I just remember being like, I want to be a businesswoman. I had no clue what that looked like. And then I really got into the stock market and, got a business degree and a few minors, lived in Costa Rica for my Spanish minor and had a finance minor and a, international business degree. And then I decided to get licensed. So I took my Series 7 right around the time of September 11th. And and then when September 11th happened, that really changed the course of my career. And I started dabbling in fraud and risk management for the world's largest check processor at the time. And then that got me my first taste of money laundering because we had multi-million-dollar check fraud rings that would sit out in the parking lot and cash counterfeit checks. And I got to work with federal law enforcement agencies that were going after them because they would generate all these illicit funds and then they had to go get them into the financial system. Mm-hmm. And so that was kind of my first dabble of money laundering, and I just never looked back.
So you got into this world of, at the time, check fraud. That was this sounds like it's, the early 2000s, 90s, early 2000s. And, how did you make the, transition to focus more on helping banks? Did you see things were going wrong?
Mm-hmm. Yeah, I think my first big remediation, my first kind of turnaround was 2005, and I was living up in Alaska, and this institution had just gotten an order at the time that was not public to comply with the first iteration of the exam manual. So this is 20 years ago. And the first AML manual had come out in 2005, and it basically was like 400, or I guess at the time, the first version was like 386 pages or something. It was, but I mean, it was quite large. And it was like the first time that financial institutions had to start operationalizing all of what came out of the Patriot Act, and, further pushing that ball down the field so we don't have another September 11th, right? And yeah, I mean, it was one of those things where I'm a speed operationalizer. That was one of the things that paid off for me as a chronic procrastinator, especially during college. Was I would, kind of delay, and then the last minute I would like cram and I'd speed read, and I could distill takeaways, and that is something that paid off very early on in my career, and especially in the turnaround world where you're working under deadlines. You have 90 days to fix this massive issue that has a lot of details to it, a lot of other departments involved, a lot of people, a lot of data, a lot of disparate data, and you have 90 days. So I was like, ooh, this is like under the gun, which I really liked.
And so this was one bank, and so you were part of the process, I guess, of, it sounds like you were helping them to get their compliance program straight.
Yeah. And then it, like, that kind of turnaround view really kind of led into other similar positions. And then, once you do that a couple times, you find out what you're really good at. You're good at reading in between the lines, helping banks try to translate what the examiner is saying to them, because a lot of times in the formal reports and in the consent orders, right, that we see that are public, it's not crystal clear, right? They will have a general statement about their dissatisfaction with whatever this bank is doing, but they don't say, and then here are some recommendations on how to fix it. And so that was something that I think a lot of people who are in the remediation business, once you do that a few times, it really becomes something that's a valuable skill that pays off in every single bank or credit union or fintech that you're in, and you're looking for those gaps, and you're able to think very quickly about the most efficient and effective way for them to remediate those gaps. So.
Well, let's talk about those gaps, or a gap, because I mean, you've become someone who is, it seems like, banks and financial institutions have on speed dial when it comes to coming and improving their compliance programs. Tell us about a specific issue or incident with a bank. What was a bank doing wrong that you had to come and correct?
Yeah, so I'll probably use an example that I found in many banks, just because I don't want a bank to listen to this and go, "Hey, she's talking about me." So probably a common one that I see that almost always has the same fix, that actually is kind of a foundational deficiency that we find is linked to a whole bunch of other regulatory issues, would be the lack of a risk assessment, which I know people are probably like not want to talk about this because risk assessments are not sexy or fun or anything. But I have a different view of risk assessments, and I feel like when they're done correctly, they really should be done with a threat focus first, which I know, especially with the government, as you're familiar with, threat, and that term threat is used a lot. It's used in the military space, it's used in intelligence, it's used in the law enforcement space. But the private sector really doesn't incorporate the term threat very well. Now, we've started to see where different bank regulators are starting to use the word threats and risks and vulnerabilities, but really, the private sector has yet to start using that term and operationalizing that term. And so I think one of the biggest things I see, whether or not it ends up in a formal consent order, is the lack of a threat-focused risk assessment. I think a lot of times our private sector folks, we and I was also guilty of this 20 years ago, where you jump right into, well, we don't have risks in this area because, and then it's basically a whole bunch of feelings sprinkled with some facts.
Mm,
And the threat focus really makes you go and look at it from a different angle, where you go, okay, if I was an illicit actor and I
hmm
wanted to move my funds through my community bank or through my credit union or through my fintech, this is how I would do it. I would take this product or this service, or I'd be in this geographic location, or I would, set up this type of business and I would run the funds this way or that way in order to avoid monitoring. And I think that's the type of threat focused approach that needs to happen. And a lot of times, what we get are risk assessments that are feelings with a little bit of facts. And then basically it's a static document that sits there. And so I think that's probably I would say a major, probably not symptom, it's probably a root cause of a
hmm
lot of the symptoms that we see.
mm,
So, because then the end result of not having a proper risk assessment is that you don't have enough people, you don't have the right technology, you've said yes to a group of higher risk customers when you should have said no. There's all these things that kind of stem from an improperly performed risk assessment, and that's something I see across
mm,
whether it's a $30 billion bank or a $500 million bank. That lack of a threat focused risk
mm.
assessment really seems to be a vital key.
Well, those risk assessments are written by the personnel, they're written by people. Is there a certain mindset that a person needs to have to be sort of threat focused? What have you noticed?
Oh yeah, yeah. So this is something that I started kind of collecting data, and not in a formal sense, just notes. I love to write in a notebook, so I just have like a closet full of you know doodles and thoughts and stuff that I've kept over the years. And I just started to notice, I don't know, probably a decade ago, that there seemed to have been this kind of theme when we had a boom in our industry, right? When the AML and sanctions industry really took off, which was 20 plus years ago, but really when I think it started to become a household name in terms of money laundering, right? It was like front page news all the time. That was probably 10 or 15 years ago, and so we saw kind of a hiring boom, and I started to see a trend of people in the industry, and I know this is a tough pill to swallow, so I'll try to be delicate. People in the industry who take a certification, they have years of experience, but they're missing what we call a hyper suspicious mind. And it really plagues every bank, from the largest banks that have gotten in trouble down to the smallest banks. And it is something that can lead to massive issues because most consent orders, most penalties that we see for banks, almost all of them, like 98% of them, are based off of that financial institution missing suspicious activity, failing to report suspicious activity, right? We aren't seeing massive penalties because they missed 10 CTRs, or they transposed the date of birth on a CTR multiple times. That's not why banks get in trouble. Banks get in trouble because they did not report a suspicious activity in a timely or in an accurate manner to our federal law enforcement partners, full stop.
Mhm.
And when you roll that back, it comes down to an individual, a low-level analyst, who is dispositioning alerts on the daily, hundreds of alerts throughout the week, where they're having to research and say, yes, this is suspicious. No, it's not suspicious. And because we have such inefficiencies in our technology, a lot of these analysts are taught to just get to the end of your day, clear your alerts. And so then they start to, over time, kind of tamper down this hyper suspicious mind. And then when that happens, that's just kind of a snowball effect, where suspicious activity that should have been at least escalated for someone else to look at does not get that extra set of eyeballs. So yeah, it's it's been a pretty interesting because I mean, just to give you a little more background on this, about 20 years ago, when I had to do my first big remediation, I was told that the majority of my hires had to come internally. Like I was not able to hire outside, and I had to build a team of 18 people,
Mm-hmm.
and I had I think 6 at the time, and I was like, crap, I got 12 people that I have to take from inside, which means I'm not going to be able to get people that have a criminal justice degree or even know what money laundering is, right? This is 20 years ago.
Mm-hmm.
And so what I started to do was, of course, I didn't know that at the time, but I know it now looking back at my notes. I started trying to come up with sample scenarios of unusual or even suspicious monetary movement and customer descriptions and give it to the people that I was interviewing. And of course, little did they know I was actually timing them to see how quickly I could gauge that they had a gut instinct that something was off. Not that something is going to be SAR worthy, that's too far down there, but something is off. And it's usually a gut instinct that men and women have when they have that hyper suspicious mind. And I was very, in a very rudimentary way, trying to measure whether or not somebody could play games with how they saw the activity in their head. And it paid off. I was able to hire people that had like an art degree and like some other random degree that had nothing to do with what we were doing, but they had that good gut instinct that something was off in the samples that I gave them. And then you kind of fast forward years and years later, and now we actually have tested requirements for it under one of my other companies, HyperS Research. We have going on six years of data where we've started putting together psychometric evaluations of individuals that are hyper suspicious. So now the science really speaks for itself.
So I don't know if the science tells you this or just your experience. I mean, what is behind a hypersensitive mind or hypersensitive mindset? Because you said, there are people with a criminal justice background, but you also said an art major. So
Yeah.
what ties it all together for someone to have that mindset?
Yeah. So what we found was, what I was going for 20 years ago was somebody with a criminal justice degree that knew what the term money laundering looked like. Today, though, what we found throughout our research is that a degree has nothing to do, the type of degree, whether they even have a degree, really has nothing to do with the way in which we're hardwired, right? The way that we see data, the way that we see the world. Our degree really has no bearing on a lot of those traits. And while I can't get into the specifics because that's kind of the secret sauce of what we look for, I will say that the majority of them are not learned behaviors, meaning, let's take, a generic one that we all know is something that is vital to have in the financial crime world. Being curious. You can't take a grown human who's 28 years old, who has no curiosity about the world, and teach them to be curious. I mean, that is a long uphill, hand-holding, timely, expensive battle to try to take a grown human and have them be curious. So, so there's certain traits like that are hardwired, that we can psychometrically evaluate using gold standards that other clinical psychologists use for other purposes besides the financial crime world.
Well, Sarah Beth, I mean, I know there are folks watching who aren't compliance officers who, hopefully through watching the show, they've been able to get a sense of kind of what happens behind the scenes. But a lot of people aren't familiar with the day to day. So I'm wondering if you can give an example, but maybe even a fake example. Obviously we don't want to, get into client issues or anything, but I mean, an example of something happening, coming across one's desk or an alert where maybe one person might ignore it, and where the hypersensitive individual that you mentioned would key on to something. What can you give us an example?
Sure. So actually, I can use one that's public, which is the which, I mean, I guess I don't have to say their name, but there was a bank that banked Jeff Epstein, and they got in trouble. And in their public order from the state regulator, it noted that there were analysts at this particular bank that received alerts on the activity for Jeff Epstein. And they dispositioned the alerts as he was just being a nice guy and facilitating these young women to get through college. And, while I don't know all the specifics that came across that alert, the fact that at the time those alerts were dispositioned, he was a known name in the financial crime world. He had negative news on him. But these individuals decided, oh, he was just being nice. And I think a lot of times I see that in a much more innocent manner, right? Meaning we're not dealing with, Jeff Epstein Jr. or anything like that. But, we're dealing with situations that are probably less severe, but could lead to something more severe if it was looked at correctly. Mm-hmm. And that's where a lot of times we put what we wouldn't do on what we think someone else may or may not be doing, mm-hmm. right? So, most of us, 99.9999% of us are have no interest in the trafficking of humans, okay? Mm-hmm. So a lot of times they'll look at data and go, oh no, I'm sure he or she didn't mean to do that, because who does that? I mean, I would never do that. And it's actually a projection, right? It's the projection of the analyst's own goodness onto something that should have zero emotion, zero projection placed upon it. And I think those are the types of things that really can get a bank into trouble, because even if we were to take it down to something less severe, down to a situation where a bank is consistently dispositioning an alert as not suspicious, and really it's got a whole bunch of cash. All the cash deposits are between $9,700 and $9,900, but there are some days in which they make a $9,900 deposit and a $2,000 deposit. So there are CTRs that are filed. I will say I see this at every single bank and credit union. There will be an alert disposition stating this customer must not mean to be structuring because he or she has days in which they exceed $10,000 and a CTR is filed. And I'm like, okay, let's not assume. All right. Yeah. So, yeah.
So are you telling me that you're looking for cynics, that there need to be cynics in compliance, on compliance teams?
Yeah, we've narrowed it down to, I think we have 17 different measurable traits. So, when we say somebody who's hyper suspicious, we're not talking about somebody who thinks that everyone is bad and the sky is falling all the time. Because then that leads to a lot of inefficiencies, right? Because then somebody can never dig out of that hole, and we don't want that. So there's other compensatory traits that we find that are very vital to being a good financial crimes analyst, but somebody who is cynical, who doesn't see the world through rose-colored glasses, really should be at the heart of any financial crimes group, because the world needs rose-colored rose-colored glasses, and the people who wear those rose-colored glasses, but they don't belong in the financial crime function. They don't belong at the branch, right? Or on the phone with a bank customer. They do not belong dispositioning alerts.
Got it. Yeah, I can see that. Yeah, sometimes it's a reverse. Sometimes you get the person in customer service and they seem like they're in the wrong place. So maybe they've been reversed. Maybe that's been the issue a lot of times.
Yeah. Oh yeah, and that's actually what we found when we do a re-strategization. Yeah, you know the word I'm going for.
Yeah, yep. A lot of syllables there.
In a financial institution, we find that we actually can assess how someone is hardwired in a non-financial crime group and do a one for one swap where you're like, hey, that person that's over in customer service actually is wired exactly how you'd want somebody wired.
Hmm.
They should actually be in your group, not over there helping customers. So,
Wow.
yeah.
Yeah. Well, speaking of suspicion, I mean, you mentioned SARS, suspicious activity reports. That's sort of the heart, the heart and soul of a lot of what happens in AML compliance. Tell us about SARS because I mean, I think we should talk a bit about this because in some circles, SARS are controversial. Some people just hate them within industry and outside of industry. But what's your take on SARS? The good, the bad, the ugly.
So many things to say. I would say that SARs serve an important role. I've trained federal law enforcement agencies. I've worked with them over the years, and I have yet to meet one agent who has said, "Oh, these SARs are driving me crazy." Right?
Mhm.
Like it is like uh, when I find that they express some type of frustration, it's because they don't have enough bandwidth, enough time, the right technology to efficiently search or manage the volume of SARs that are submitted. I think from the private sector, I think a lot of the noise about, um, well, I guess a lot of the negative noise about SAR filings come from individuals who feel like they don't get any feedback, which is a longstanding problem. And I know there's different agencies that are working hard on trying to figure out a legal manner in which they can share some type of thumbs up, neutral thumbs down when it comes to different SARs and SAR types. I don't know if that'll ever go through, but I would say that's the general frustration I get from all the AML officers in the private sector. They kind of feel like I really wish that my SARS,
Mhm.
that I like knew that somebody found value in that. Um, then there's a whole bunch of people I think on the fringe, from regulators to bank executive management and board, and people who are retired,
Mhm.
who like to say that the SAR process as a whole needs to be revamped. I definitely think there's lots of room for improvement, for sure, in lots of different areas. Right, the fact that we don't even have a box on the SAR form to designate crypto or digital assets, huge problem. There's other types of typologies that the private sector are charged with monitoring and filing on, that there's no box to check that on the SAR form, right? We can't say a human trafficking, right? This is a typology for human trafficking. So there's different things like that that I think would help both the submitter as well as the user of SARs, which is our law law enforcement folks. And I think having both sides in one war room would help.
Mhm.
um, but I think some of the suggestions that we have kind of in the space now, to increase the dollar threshold, uh, I don't I don't agree with. Uh,
Really? Why? Because people will say inflation, that the requirement, is decades old so, yeah, what are
yeah.
your thoughts?
So the inflationary comments I hear, at least for like the CTRs, which
Mhm.
is like the 10,000 and up, I think they're looking at the wrong thing, right? They're looking, and well, I don't know, their denominator in their head is today's value of homes and milk and cars and everything else, right? Which is, where they pin uh, inflation on. And I think really the denominator should be what is reasonable. Like, I have at most anytime $100 in my wallet, and that's just because my babysitter only wants to be paid in cash. Right, but like if I didn't have that, I would not have, like, I would probably have $40 at any time in my wallet. So somebody having $10,000 or more in cash, does it mean they're doing something wrong? No. Is it reasonable? No. Not today, not with how everything is so digital and everything is debit card. So, I think people use the inflation argument for CTR specifically, because they want to figure out a way to reduce all the reporting.
Mm-hmm.
I have a couple different thoughts on how to do that better, in terms of streamlining that a report that kind of brings in a little bit of what Australia does and a little bit of what Canada does, but that's for another topic. But I think from a SAR perspective, the threshold is 5,000 or more. And I mean, if you know the person, if you actually have identified the suspect. And I think given the fact that we don't have different thresholds for different typologies, the last thing I would want to do is increase that dollar amount to 20,000 if you have a suspect that's identified, and have a 9/11, right, where it was financed for less than $5,000. So that's where I don't really see a benefit in the SAR reporting. I think a lot of times people, when they talk about moving the threshold up, it's on the CTR side. I think the SAR threshold should stay the same, but I think we need a lot of work, a lot of refinement on both the government side from the regulators as well as the users and submitters of SARs.
So if someone is saying, well, $5,000, I'm getting all these, I'm forced to file a SAR when there may not be any issue there, and it's taking me away from focusing on the more riskier issues. What do you say?
That's a tough one, because for me to answer someone who would say that to me, I guess I would need to know what their threat assessment looks like. Because if they're, banks are not charged with finding every single illicit actor and every single illicit dollar that flows through their, flows on their rails, essentially, right, in or out of the bank. That is not what the point of the SAR reporting process is, or even all the necessary steps leading up to reporting a SAR. That is not what banks are supposed to be doing. They are supposed to be taking a threat-focused approach, which, a lot of times they look at it from a risk perspective and they go, oh, well, we don't have the risk of a proliferation financing. And so they just kind of don't even look for that typology. And it's like, whoa. Your threats and vulnerabilities have to come before your risks. Your threat customer base is actually quite sizable, because you, U.S. Community Bank a lot of manufacturers in the refrigeration space, and they make all the little coils and all the little attachments for all the little parts in a refrigerator, which sounds very benign, but we know dual use goods. And so a lot of times, like, my next question when I hear that type of feedback where they're like, oh, I'm spending all this time, for something that's $5,100 or whatever, and I have to file a SAR for that. Are you looking at it through the correct threat lens? And not just that particular one that's, right at the filing threshold, but all of the activity. Are you going after your biggest threats, or are you just filing, for fraud and for structuring, which I would say most community institutions, 98% of what they file is not anything complex, right? They aren't looking for proliferation financing. They aren't looking for labor trafficking, right? All these nuanced typologies, they're filing on structuring and they're filing on fraud.
Hummingbird is a compliance platform that's reimagining what's possible from financial crime investigations. Teams using Hummingbird work more efficiently and effectively without compromising on quality. Investigators quickly get to the heart of each case with information at their fingertips and compliance-grade automation and AI to boost productivity. Designed for essential work in anti-money laundering, anti-fraud, customer due diligence, and more, Hummingbird allows you to customize the platform to your policies, giving you exactly what you need to get the job done. Hummingbird is determined to fight financial crime by empowering those on the front lines, because financial crime never stops evolving, and neither should the tools you use to stop it. Learn more at hummingbird.co. That's hummingbird.co. Can you tell us about an experience where things didn't go right? I mean, because I know you're very successful, but people often like to hear about when things, how did you get to that success? There had to be some road bumps along the way. What can you share?
Oh man. Yeah, I mean, uh, I think I'm an acquired taste. I I pull no punches, and so I had to learn very early on, especially when I started my consulting business 14 years ago, that what I wanted to say um, and what is helpful are two different things. Um, and knowing your audience goes a long way. So as I got further into my consulting company, it was um, it was critical that I take feedback from my clients, who were mainly men, right? I mean, because it's the banking world, and let's there's nothing wrong with that. There's just a lot of men in charge, and so I had to learn very quickly based on some feedback I got during a remediation project that my messaging needed to be more concise. And it's never fun to hear like I don't I am tossing out everything you're telling us because I don't like the way in which you presented it.
Mm.
And while that's probably something where both sides have a responsibility, what it taught me was when dealing with the opposite sex, when they're hiring you to fix them, they don't need to know all the details, right? They just want to know at the end of the day that I'm going to get them fixed. And I had to learn that. It took a couple projects, but I feel like I've um, nailed it. I mean, I'm not perfect at it because, I'm a woman and
Mhm.
I like to describe things and talk and, all that kind of stuff. But I try to be hyper aware of uh, the listener
Mhm.
and read body language and cues, so then I can be an effective communicator.
So you're telling us men don't like to be criticized? Is that what you're saying? That's what and you figured that out when when you got the feedback from these guys that
Yeah.
maybe we'll take your advice if you tone it down a little bit.
Yeah. And I think there's a lot to be said for
Mm.
the end goal, keeping your eye on the prize of like really wanting this bank, credit union to be running like a well-oiled machine. And if that's really my goal in all that I do, then I have no problem making sure that my comments and my critiques and all of the information I'm giving the other party is not offensive and does not stand in the way of my ultimate goal, which is to get this bank out of the regulators' crosshairs, and into a position where they're finding truly suspicious activity and reporting it timely. And so, I mean, I don't think anyone likes to be criticized. I mean, I certainly don't like it. But I think when you're able to take it and take it with a grain of salt, take the emotion out of it and go, okay, these are their needs that they're telling me, and this is how I'm going to meet those needs, and also get to my end goal of making this bank better. So.
Well, it sounds like you're able to sort of keep your eyes on the prize, right? Keep your eyes on the goal for the client, for the bank, helping them, giving them what they, not just what they want, but what they really need. Um, so, with your success, what has been the greatest lesson for the past 20 years that you'd like to share?
I can't do it all. I think there's a lot of me that I like to fix stuff. Somebody the other day called me Fix It Felix. I was like, I like that. Um, so I like in my personal life and my professional life, I like to fix things. And I had to really work on boundaries, which a lot of people always kind of, hear that word boundaries as something that's only in relationships, personal relationships. And I think it's also professionally, because if I try to fix all these things and I try to, pitch in, whether or not it's wanted or not, I will get burnout and I will not have as much focus as I need to actually see things through. And that's where, I mean, while I'm still involved in quite a bit with my consulting company and my bank and my other startup, it's something where I had to learn very early on when, we had the we had the Gramm-Leach-Bliley Act, we had the ID theft prevention program, we had all these things in the early 2000s that everyone was also trying to be experts on. And I had to pick a horse. And so my horse is sanctions and AML. So I'm not trying to be an expert in the alphabet soup regulations or basically anything else. And so that was my one horse. But even after I chose that one horse, I still had to make sure that I wasn't trying to fix all these things, right? I had to keep, as I tell my daughter, like, don't move your fence into someone else's yard. Right? And so when I find all of these issues in our AML and sanctions industry, I want to go move my fence into that yard to fix it. But if I continue to do that, then I'll run out of the the bandwidth to actually make an impact in other areas that are within my yard. So does that make sense?
It does, but you also just casually mentioned that you have a bank. You started a bank. I've seen honey. I've bought a zoo. I've never seen honey. I've started a bank. So could you tell us about that?
Yeah. So this was actually born out of the desire to help the mass de-risking trend that we saw in 2015 and 16, where foreign financial institutions, I believe, were as a whole unfairly cut off from the U.S. financial system by a lot of the tier one banks. And there's been Senate hearings and all of this stuff that we've seen over the years where these banks say, no, we didn't do, we didn't just mass cut these people off. And the regulators are like, oh no, we never told, Bank X to exit their foreign financial institution customer base. But so no one's taking any fault for this is basically what that means. So 2018, I met Damon, who is one of my co-founders. I was doing a project for a bank. He was also at that bank doing something completely different. And he was like, hey, tell me about what you're doing. What are your biggest pain points in your industry? And I was like, I'm playing matchmaker to banks and island nations, and I'm trying to one by one match them up with community banks in the U.S. that I believe have a strong AML program, and that would be a good bank partner for them to clear their U.S. dollars. And that was not sustainable. And he was like, well, what do you want to do? And I'm like, I want to start a bank, and I want this bank to be so narrow focused that the regulators aren't worried about us. Because we're not trying to do all these things that, these large tier one banks do. And then they have this little tiny sliver that they bank foreign financial institutions. I'm like, I only want to bank foreign financial institutions. So we kind of started down this process. That was 2018. We started working. We were in a different state than we are now at the time. And we were essentially told throughout our 2 years that wasn't going to happen, that they did not want us banking foreign financial institutions because they wanted us to have a super compliance program. And there was no way for them to test it. So we decided to bank U.S. financial institutions first. So then our regulators, federal and state, can kick the tires. They can see what a great sanctions and AML program we have when we're only banking domestic financial institutions in the U.S. And once they, kick the tires on that, then maybe hopefully someday in 5 to 8 years, the regulators will let us bank foreign financial institutions. But we found, and what our goal is right now, is to only bank U.S. financial institutions. Because as we started down this path, we started to see where we really could use our technology in a way that helps community banks and credit unions make money on something that they're already doing, where they make no money and they have a lot of compliance risk that's shifted to them. And our technology, we have 2 patented pieces of technology, and it fixes both of those issues. I won't go into the details of it, but during this process, because I like to fix things, like I said earlier, during this process, the thing I wanted to fix was banking foreign financial institutions, but that's kind of off the table for right now. So what we found was domestic financial institutions could also use our help, not just with making money, but also that rising tide lifts all boats, because we have super sophisticated technology that we're deploying. And because we're solely focused on sanctions and AML compliance, right? We're not making loans, we're not taking deposits, so we don't have to deal, we aren't distracted. And because we're getting this area so right, we have the opportunity to inform our client banks. So our US community banks and credit unions that will bank with us, we get to have that open pathway with them saying, hey, I'm not sure what you guys have found on John Doe, but this is what we found. Has your system found this? And then that gives the opportunity for that community bank to go, oh no, crap, what are we missing? And so it's that rising tide. And then we help community banks and credit unions get better and better at sanctions and AML, as well as, helping them with our services that we offer. So, yeah.
Amid escalating regulatory demands and a surge in fraud, the need for financial institutions to remain compliant, efficient, and informed is paramount. What's getting in the way? Manual processes, lack of insight to regulatory changes, lack of transparency for decision-making? With Thomson Reuters Risk and Fraud Solutions, financial institutions achieve more than 40% more efficient customer onboarding, making their teams even faster at reducing risk to fraudulent losses at the same time. Thomson Reuters Risk and Fraud Solutions empower financial institutions to safely onboard and continuously evaluate customers, members, and vendors, and to increase new business securely through automated technology. Thomson Reuters equips institutions to navigate complexities with confidence by elevating beyond mere risk management, setting new industry standards for decision-making and operational efficiency. Visit tr.com/clear to learn more. I wonder if you can explain the purpose behind even your overarching goal, because I don't think a lot of people don't understand how the banking system works and correspondent banking. So tell us what's wrong with what you notice in terms of certain banks being cut off, and are these mostly banks from certain types of countries? What's the problem there?
Yeah, so this was about a decade ago when this really started to kind of make the news. I know the World Bank's had panels, and the IMF has had panels, and we've had lots of panels in DC on this. And I would say, as a whole, most foreign financial institutions are cut off because the U.S. designates the country that they're in as higher risk. That's kind of the first step. Now, that doesn't mean. Now, I'm not talking about sanctioned countries, right? I'm not talking about Russia. I'm talking about Iran, island nations. Yeah, I am talking about island nations, typically Central America, South America, the South Pacific, where their AML framework at their national level may look a little bit different than ours. Their enforcement is not going to be as broad as ours, meaning no one has, 6 different federal law enforcement agencies that have access to SARS like we do, right? We have, many different ways in which we can act on suspicious activity. And not every country is designed like that or even close to that. So I think, there's lots of different factors that kind of go into the US taking a stance and saying, hey, this country and this area of the world is higher risk. And as soon as the U.S. designates another country as higher risk, it makes the U.S. bank partner that's banking them, it forces them in an informal manner to then put a whole bunch of people and technology and monitoring behind that so they can justify to their regulator that they aren't banking a bank that has illicit clients downstream from this bank. And so I think that's probably the first kind of blush on this. As soon as you see a higher risk, and I'm not talking high, I'm talking higher risk country, a lot of banks just go, oh yeah, nope, sorry, I'm not going to do it. And it's like, wait. But if you actually look at that country's framework, let's say island nations down in the Caribbean, most of those countries have been enforcing beneficial ownership requirements, both at the collection level when they go to a bank, as well as the FIU, right? Their financial intelligence unit at their federal level or at their national level. They've been collecting beneficial owners on businesses for 8 years longer than the US has. Right? Yeah. Now, granted, that's only one tiny part, but still, like that type of data needs to be looked at, in a very sober manner, because what we do is we kind of lump them all in because they may have a reputation for offshore businesses, yet the U.S. has the largest onshore-offshore generating states for anonymous companies. Yet no one's going to these banks saying, hey, you tier one bank, you shouldn't onboard any businesses that were incorporated in Delaware. No one's doing that. But then we'll go and do the same thing for a country that has way less corporate establishments and generally higher risk view, even though they are collecting beneficial owners. So, yeah.
Well, I mean, no, it's great because you're trying to, bring fairness into the ecosystem, and I mean, that's, I think, a very noble goal, and you're doing it in a practical way, and you're starting, here with institutions, and building something that could be expanded upon. So yeah, I commend you. I think that's great work. And again, looking at your career, what you've done, your sort of service to, I would say, to the greater good is, it's something that I think we need to acknowledge, that people need to acknowledge. Sarah Beth, with all of your experience, I know there are probably people here listening or watching, compliance officers. Is there any singular advice that you'd like to give to those compliance officers that want to get better and be excellent at AML and sanctions?
It's a great question. I think probably to follow the boundary advice, right? To pick the things that you can change and change those, right? Don't spend your time trying to fix things that are completely out of your control. But because I said that earlier, but I think the other one would be, don't be afraid to burn it down and start over. Meaning, because we've had the manual, this exam manual for 20 years now, happy 20th anniversary. Every AML officer, if you're in a traditional financial institution, bank or credit union, they don't want to strip everything down and rebuild because they don't have enough people. But I think it's a good exercise, right? If you start from scratch and you go, if I had nothing to go off of, right? I didn't have this legacy risk assessment that's been handed down to me for the last 10 years, in which we edit, the numbers, and we go in and add a little, a few lines about what we're doing. If I didn't have these procedures that we've had for 20 years that we just keep adding to and taking from, depending on who audits us and gives us their advice, if you had to burn it down and start all over, what would it look like? And I think that's a great exercise. And again, I know when I say that, people will hear this and go, I don't have time, right? Yeah, but they don't most. I will say, unless a bank is under an order or under some type of penalty, they are going to be understaffed 100% in this function. So I think it's hard for me to say, oh, let's burn it down, and then it takes you weeks to build it back. But I think doing it in a controlled burn, if you will, how they do controlled burns, so then the
Yeah.
fires don't overtake everything. And I think that's kind of the mindset. If you were to look at your technology, look at your solutions, and go, all right, if money wasn't an issue, if the technology wasn't, if I hadn't signed an 8-year long deal, what would my daily alerts look like? Would they be all structuring? Would they have, some of the higher risk typologies that banks are charged with finding, from all the FinCEN guidance? Like those types of exercise, I think, in like the burn it down, it needs to be controlled. It needs to be focused. And I think that has the opportunity to really change an AML program. And, that's probably the advice I would give.
We can learn quite a bit from Sarah Beth Felix. She tells us how the anti money laundering ranks at the banks need to be active and perceptive in identifying suspicious transactions within their institutions. But Sarah Beth is not just an identifier of illicit activity, but a problem solver who is building her own bank to serve as a model for how foreign banks from smaller nations can attain the high AML standards necessary to gain access to the U.S. financial sector. Impressive work, as she helps to fight financial crime around the world. I'm Yaya Jata Fanusie, and this is Designated on the Illicit Edge Network.